But broadly speaking, what we're looking at is because of Tanzania being about half Christian, half Muslim, there's generally a big population of potential investors from the Muslim community here in Tanzania. But then again, sukuk is not only limited for you to have, instead of being a Muslim, anyone can invest and even Christians to invest. But additionally, I've been seeing interest from GCC countries, from places like Indonesia and Malaysia. And as we speak at the moment, we're actually in the process of developing written guidelines. In as much as we've had issuances in the market, but there hadn't been scope specific guidelines. But we have some support from UNECA, United Nations Economic Commission for Africa. They're working with us to prepare guidelines that are going to help us. And yes,
Since it's already working, what is the purpose of the guidelines?
so the purpose of the guidelines is to make it much more fast and easy plug in place, so to speak, for the issuers, the advisors, and the reviewers. Because at the moment, yes, any issuer would need to have a Sharia board. Let's say, for example, even if it's financial institutions like KCB or CDB, they would have their main board as a bank, but then they would have a Sharia bank that would guide them. We have a couple of our licensees who are well versed in sukuk securities. One of them being Sheikh Isa Mohammed, who's been instrumental not just in Tanzania but regional as well, even in places like Zambia, Rwanda, Uganda, etc. So the guidelines are meant to say that it's one well documented rule. People don't have to second guess. They don't have to go to experts, specific experts, but they can actually refer to something that regulators can put their website and say this is what you the tick pockets over and above the normal
So in a
listed
nutshell, it
rules.
should make faster and easier for new issuer to come at DSE and list their
Yes,
bonds, right?
yes, absolutely. So you don't have to
Reinvent the
to
wheel
go
every
this
time.
merry-go-round, reinvent the wheel, have to look for a specific advisor saying Eric is an expert in this, I can only work with Eric. So insofar as you have the documented rules, it's easier for us as well as the reviewers to say yes, they've completed that and this and that. So it's been good so far, but in the future, we are seeing a lot of potential. Currently, in Uganda, they're looking at financing part of their standard gauge railway construction using sukuk, and they're done a roadshow here, and they're looking to raise some financing from here and regionally. So even in places like Zambia, for example, we don't have a very predominant Muslim community, but they are looking at sukuk issues, and that's the go-to area. So it opens up a whole new door of investors beyond the borders of East Africa or Southern Africa to look to the Middle East and Southeast Asia as well. But in Europe and Western Europe and North America, we have a lot of interest as well.
Um, I would like to take advantage of this one a bit shorter the interview. It is clear that bonds are working incredibly well. And I think we discussed it last time is also because companies see the fact that they don't have to dilute the ownership of their companies and yet having access to capital at a maybe cheaper rate than what they get from banks, right? However, I do understand there has been always an intention to bring more company listing, and there was the directive a few years ago that required the telecom companies to list 2 days. The only one that complied was Vodacom. What is the situation to that? And also, can you expand on the money? I understand there are now some activities in the money sector. Can you tell us what's going on in telecoms and money? Can you expect some some stocks listing, not just bonds?
Yes, so equities have dried up in Tanzania for a number of years now, but also across the continent, I would say. And in some places, at least we've had a very few issues as far as we have not released in some places globally. They are about to see delisting trends. But coming back to your question specifically, in Tanzania, yes, there's the Electronics and Postal Communications Act, which requires telecommunication companies who cross a certain threshold of capitalization to come and list at least 25%. Vodacom Vodacom Tanzania PLC complied almost right away. A number of the other big telecoms had a number of different reasons why they didn't. To start with, I can give an example of what used to be Millicom Tanzania or Tigo, which at the moment are going through a couple of transitions. First, they acquired what was Zantel, which is part of Etisalat Group. And later on, they changed ownership because Millicom sold their interests to Honoria, which is now Yas, and the mobile money arm is mixed by Yas. So after that, they had to rebrand, etc., and they're looking at coming to list down the road soon. And then we have a case of Airtel Tanzania, who, after some discussions with the government, increased government ownership with the 51, 49% ownership, with 51 being with Bharti Airtel. And of course, Vital has their own issues with the parent company holding. So each one of them we've been at different discussions. At some point, there was an issue raised by some of the stakeholders to say whether this still made sense if only one telecom company complied. But after long discussions, part of the budget process, it was unanimously agreed not just by capital market experts, but across board various experts that were part of the task force for the budget to say, no, actually, we need to enforce and make sure those that had various delays or stays for various reasons to now comply. So we're working with the main regulators, who's TCRA, and the Ministry of Telecommunications, of course, to bring these companies on board, as well as other companies. I've just mentioned the major telecom ones. But additionally, from the mining side, mining companies as well are supposed to come and list. So working with the Mining Commission to bring those through. And while we're working on the bigger mining companies to come through, there's of course a couple of issues there to look at. There are some companies that pay royalty to the government. So the government receives 16%. So where there's questions that we're already contributing something to the country, free carry interest from the government, do we still need to go list, etc. But those are hurdles we're trying to cross with the ministry and with other regulators. But additionally, while we're working through that, DSC has taken initiative working with the mining commission and the ministry to train mining companies, the value chain in mining industry. We just last week completed training for suppliers, distributors, small scale miners in the mining value chain to be able to access capital markets. So there's the voluntary part from the smaller players that we're working on. But from those that are required by law, we try to figure out working with the government who maybe will get away or who won't. But our hope as this is that everyone should come in and list. And alongside that, we do have state-owned companies as well, the biggest one being Stamico, which has already expressed interest, and there's support from the Treasury Registrar's Office because it's only owned by the government, or rather, Stamigold, which is the gold mining commercial arm of Stamico, is looking to list first. While Stamico, which is the holding company of mining interest for the government, is figuring out Stamico itself might not list, but they might list their companies elsewhere. And the broader context, speaking of listings in general, uh, speaking of government state-owned companies, the Treasury Registrar's Office is seriously looking at bringing more companies because when the exchange started, it started on the back of state-owned companies privatizing and coming to list. And that went dry, the last one being NMB in 2008. But during DSE's celebration of 30 years in the beginning of July, the Treasury Registrar, Mr. Nemeki and Mchechu, did promise about 4 or 5 companies that are investment ready and looking to come to the market sometime this year or in the next year.
Which is interesting because you can force state-owned companies to be basically to be fit for the DSE.
Yeah.
First, they have to show that they have some profitability for the last few years. I assume, unless they go to the enterprise go
Yes. So,
main market, right?
yes, the indication is that they will come through the main market. There's a lot of other initiatives they're looking at because there's about 300 odd companies or so that
Yeah,
are
the point
that
is that how
stage.
many of them they
Yeah.
have the
The-
financial muscle to actually be attractive instead of
Yes, that's the piece of work that we're doing. So the 4 or 5 companies are immediately ready in terms of governance, profitability.
see that to the market. Out as vacation, make us
Yeah, possibly, possibly. Yeah, so there's a number we're looking at. Another angle that we're looking at, which we've had discussions of at a very high level, is you have a number of state-owned entities who would never want an interest to necessarily come and list. An example maybe being some state-owned utilities who are deemed to be strategic assets that they don't want to list. Some might be academic institutions, but etc. But a number of these do have subsidiaries which are commercial in nature, and from time to time they actually need funding for their business case to make sense. So the EGM window is an area that looks very attractive to them, and we are in thoughts internally to see how we can target those companies, specifically the subsidiaries. Tanesco may not come list itself, maybe at least not immediately from the summer discussions we've been having, but we might have one of their subsidiaries which looks at say, procuring electric poles for their projects or procuring transformers for the national grid line to come and list. So those are different angles we're approaching.
But again, those companies, if you're looking to raise capital to these commercial subsidiaries, do you think they will list or they will eventually see that bonds works for them? Well, the pressure for the
Yeah.
trend is a boss.
Yeah, so we might eventually end up with different schools of thoughts. Some might prefer bonds because they don't want to be diluted, etc. The philosophy behind coming to lists is twofold. On one part, and this is a philosophy shared by the Treasury Minister, but also I do believe shared by Madam President, is that we've seen success stories with companies where the government allowed itself to get diluted. Most of it was on the back of reformation after socialism. But those companies turned out to be very profitable. Even if the government holds 30% or so, they're still getting significant amounts in dividends. Those companies, because of their profitability, they're contributing through corporate tax payments, etc., employment. NMB is typically usually measured as an example, a North Star, so to speak, because with 31% government holding, NMB is consistently one of the largest contributors during dividend day, which is held annually around end of June, mid to end of June. So the thinking with the government is that with some companies, it's good to allow some private holding to come in, individuals come in, have these companies divest a bit from the government holding and have them operate more like free commercial entities and not so much tied to the traditional state's SOE philosophy and way of operating. With others, it might come down to saying, you know what, if we can source money at maybe 10, 11%, hopefully down the road, maybe we get to single digits. They'll say this makes more sense for us and we don't need to jump through hoops to get listed. So it may be a different approach with 300. Obviously, not going to get 300 listed. But even us as an exchange would want to have the top cream, the top
No,
tier
taking
listed.
that actually maybe also the fact that once you allow private capital to get in, maybe there is a new impetus in a traditional government companies that might be a bit of disobserved, the politics a bit of this and that. Once there is private capital to a substantial extent in the capital of the company, they might want to assess, maybe to appoint different directors and blah, 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 try to do the case here.
Yes.
No, just because if I look at, as you say, the last listing was 2000 and the last stock listing that this that's not
So the last IPO from the government or from a state-owned entity was
No, no, no,
NMB, but the
last
last
IPO.
major IPO was Vodacom in 2018. In between, we had a small one, which also turned out to be disappointment with Jato, but the last major Jato.
Yeah, too.
Yes, but the last major one, yes, was Vodacom. So it's been a while. It's if we don't get this soon, it's going to be a decade before since we've had our last listing. So we're hoping to really get something on the market, but something that is worth bringing to the market.
And yet we see, for example, David Props, like for example, there was this launch yesterday of the Arab late. Goodness will brief me with the news, but basically it was funds of funds, right?
Yes.
So it's an ETF exchange traded funds that invest in the other ETFs or in the other funds.
So they're going to be investing in other collective investment schemes. I imagine they'll be investing mostly unlisted currently, but they're looking at not just within Tanzania. They're talking, they're for approval for East Africa. They have an East Africa mandate. So up to about 50% of their targeted portfolio mix is going to be in collective investment schemes regionally. And what this is going to do is, on one part, if you look at the profile of investors in Tanzania, very recently we've seen a very big surge of investments coming through from collective investment schemes. Of course, Unit Trust of Tanzania being leading. Total asset under management right now is in excess of 6 trillion. I think we're heading towards 7 trillion. Number of investors has increased substantially to I think 1.5 million. It was not too long ago, about half a million. So most investors have already started investing in that avenue, but what we're hoping to do through products like the ones that Zan launched yesterday, said, okay, you already have an appetite to invest in these collective investor schemes. We can have you invest in something that accesses that kind of risk, but at the same time, it's listed on the exchange, so it gives an even easier exit instead of you having to just go directly and sell to the issuer. So for us, it's a new avenue, and it also gives access to East Africa wide risk, because one of the things that we, as East African Securities Exchange Association, are saying is that we are one market, and our slogan is one market, infinite possibilities. So hopefully, by doing this cross listings or doing products that are based in securities, uh, domiciled in other markets, we really bring that integration into the spotlight.
And then let's get to my last question, which is exactly about regional outlook. Because from what I understand has been happening so far, which is to expand the access to the capital markets of basically the financial and industry, which is happening. I see this because now the access is 500 trillions, 1,000 trillions, to make sure that that industry, GZ, to the technology, start to understand and have access to the market and eventually then will grow, right? But at the same time, I do see this at this stage is integration. I don't know if it will shape as a competition, but basically is that in here you want to bring investors to invest in here, but also the product that allow progressively to invest in regional markets and buy products somewhere else. I assume that the same thing is happening to the other countries part of East Africa.
Mm.
So product that allow us to participate here. We saw that today the DSE is basically outperforming many other countries actually. I was looking at the graph that we put here, which was based on the figures of the first semester.
Yes, I think in the first half in local currency, we are maybe fifth. We have 51% return, I think.
Yes, exactly. I see
4%,
here
yeah.
that this is on local currency. On
Yes,
on USD, you are 36%, I believe. And
yes.
so on local currency, basically, you're leading here. You see after Nigeria, Ghana, and then look at that Uganda, Kenya, Namibia, Botswana. These are those positive. Okay, these one are really outperformed ones. So I assume that there's definitely demand for the region also to buy here. So if you have to look at the future, how do you see between integration and competition, who is going to be the leading stock exchange in the next foreseeable future?
Integration is the talk of town right now. Tanzania being part of East Africa community and part of SADC, we have our own integration project happening in both regions. But from a Pan-African perspective, we have the Africa Exchange Linkage Program, which we're working towards. So a lot of us are trying to think of how to integrate. Of course, two challenges that are still facing us is the technological angle, how to make systems talk to each other. But second is the harmonization of regulation, etc. We have to work with our regulators, capital market regulators, to work that. But third is the settlement issues that we have because each country is operating its own currency, and currently there isn't a whole lot of liquidity from an FX market perspective across currencies. So we're thinking, do we go through one of the hard currencies? Do we establish a stable coin to help with that? So it's I think that goes around. It's going around. To your question in terms of integration with the competition, uh, if I'm being brutally honest, there's always going to be that element of national pride and wanting to be the number one, wanting to be the second center of focus even within the wider market. So there's also going to be an element of that. But I believe we're at a point where there's one common purpose as African markets because we've realized that trying to go at it alone or competing with each other actually renders our markets too small, and you're not going to work a fund manager from New York, London, or Hong Kong to worry about a minuscule deal happening in Tanzania alone. But if it's something that is pan-African, then it makes sense. Some of the news that has come out recently is Dangote thinking of doing a pan-African IPO. Still very unclear how that's going to work out, even amongst ourselves as sales of exchanges. But if we can work those kinds of conversations to come into play, and a lot more of the Dangotes of this continent raising capital from within the continent, targeting the 1.6 billion or so investors that are here, about 1.6, 1.7 million trillion dollar market cap in total already existing within the continent. Hopefully, we can get a lot of global investors looking at us with much more focus. And for me personally, I believe that's the way to go. And to your point, I believe as much as we still have our own internal pride, personal pride, uh, the uh, the integration story will prevail.